everybody. Welcome to your latest Carson's Take 5. Ryan and Sonu here. Sonu, it's a little warmer where I am. Do you know where I am?
I just know that I'd rather be where you are than where I am.
That's true. I've got my cameraman Jason helping me here. We're out here for my wife's 50th birthday. We're in Arizona. That's the Camelback Mountain behind us, and you can kind of see. I mean, it's a camel, right? That's why they call it the Camelback Mountain. Sonu, so we made it to December. Back to December. A little play on Taylor Swift, and then there's another song with December. What's that? What's the band you like called?
The Collective Soul one, which is as 80s, 90s kids, that's the stuff we grew up with, as opposed to Taylor Swift.
I say maybe we'll get some more algorithms with the Taylor Swift theme. But whatever it is, Sonu, you and I talked a lot last month. That volatility, the market was up 38%, and then had about a 6% pullback. Everybody freaked out. And then the week of Thanksgiving, stocks soared back, and we're flirting with all-time highs. Are we going to have a rally in December, we think?
It looks like December historically has been very positive from a seasonal perspective. And so that's one. And two, we have the tailwind of momentum, right? We've talked about momentum in the past, how momentum begets momentum. The S&P 500's gained just about 18% over the first 11 months of the year, 7 straight months of gains from May through November. And the nice thing, Ryan, is that this 18% return has mostly come because of profit growth, as opposed to valuation and optimism expanding, right? It's mostly about, in fact, I would say, and you've looked at this too, sentiment seems a little on the negative side. People aren't that optimistic, and that's not a bad thing.
Well, hopefully if you listen to these weekly videos, you know there's a lot of reasons to be optimistic, but you're right, and that is kind of fascinating. I mean, we do this every day. The S&P 500, everyone, is up 7 months in a row. And yet you look at different sentiment polls and put-to-call ratios and the VIX. We'll keep this all high level. We saw it last week, so maybe let's say 2 weeks ago, like some historic levels of fear. And then you get some potential positive news. Maybe the Fed's going to cut next week. Actually, by the time people listen to this, it's going to be this week. But the Fed's going to cut very soon. We'll talk about that probably next week, so we'll keep that high level. But just a couple things, Sonu, for me, then I'll probably let you bring us home. December, there's no month of the year. Again, welcome to this. Doesn't feel like December out in Arizona, by the way, at least what I'm used to. December's higher 73% of the time. But again, when you have a strong year going into it, when you're up 5% for the year, Sonu, going into December, in a first year of a presidential cycle, like right now, Sonu, never lower, going back to World War II, higher 12 out of 12 times. It's one stat, yes, but we also know about 80% of fund managers are missing their benchmark. That's a long-winded way of saying there is money on the sideline. There's going to be a lot of people that want to buy any little weakness to continue to probably push this bull market higher. Sonu, we're probably getting pretty close to 5 minutes. What's something else we should be watching for that can keep this bull market going?
The good news is we're finally going to get some top-tier, top-shelf official economic data, which we haven't gotten for 2 months.
How happy are you? I mean, you love data, Sonu. How happy are you? You're going to have something to do all day again, right?
Like, here's the thing. I mean, just to put, underline that, we're getting Q3 third quarter GDP growth data 2 days before Christmas. So Christmas is coming 2 days early for me.
There you go.
But no, look, we haven't got a lot of data, but the data we have gotten is from earnings calls. And profits and earnings have been really strong. If you think about maybe you can end with this. Profit growth, you can think about it as 2 separate pieces. How much comes from sales growth? That's tied to nominal GDP growth. As long as we don't have a recession, sales growth is running fairly strong. And guess what? The fact that sales growth is running strong tells you that nominal GDP growth is pretty good. Then the other part, where do profits, come from? It's margin expansion. That tells you how good companies are at navigating everything the global economy and policymakers throw at them, including tariffs, by the way. And companies have come out, looking really good. They've been able to expand margins. That's why profit growth is strong, and that's what's driving strong returns for the 3rd straight year.
Love it. So again, we have a dovish Fed. We'll talk about that probably next week. We have strong corporate profits. We have momentum. And honestly, a little bit of skepticism, which is bullish from a contrarian point of view. With all of that, back to December, we think this December is probably going to be a pretty good one for investors. Everyone, thank you again. Live on location out in Phoenix here with the Camelback Mountain right behind me. We'll see everybody next week. It'll probably be colder next week wherever I am, Sonu, but that's all right. We'll see everybody then, and enjoy this continued bull market. We'll see you next week.